Hey, it's Andreas. I've been investing for over 10 years. Let's talk about Charles Schwab stock today. Stock price, it's been up a lot historically here. We can zoom in a little bit. We can see that it's been going more flat. However, solid performance over the past 5 years, also including dividends. Some of the competitors like T. Rowe Price here, for example, has not performed as well and seen more of a dip in share price recently. Why is this? Well, let's explore it together. What does Charles Schwab do? Well, they manage assets for investors. They do this in a variety of ways. Some of the ways we can find here on the website: active equity funds, equity index funds, fundamental index funds, bond funds, real estate funds, asset allocation funds, and the list goes on and on regarding this. And the more financial instruments you make and the more complex they are, the more you can sell it and charge a higher management fee. So let's check if this thesis holds water. If we take a look at by the numbers from the latest quarterly earnings call here, we can see that the Westlake, Texas-based company here not only increased clients' total assets here because the stock market went up, remember, by 27% to a record 9.92 trillion. We also see that fees, they increase along with assets under management. So now we know assets under management, important. More assets, the bigger the fee becomes in pure monetary terms. And then of course the size of the fee as well. Whether it's a flat fee of 1.2% or a flat fee and a performance-based fee. So if you perform above 10%, then all of a sudden you charge more in the actively managed fund. That's one way that they do. Or when you buy in, it's a load, they call it. You pay straight up to the fund manager. There's a variety of different complex ways in which asset managements charge their clients. And if you don't educate yourself on finance, well, then you're just gonna go along with it and pay a substantial amount of your future income to the asset manager, because this really compounds. So we see here record profits as a result of this fee, an increase by 20.6% to 1.48 billion in profits. Fantastic results. And regarding this, we see somewhat of a trend. It's out there with investors switching to more passively managed funds. However, with regards to pension selections in different corporate schemes, we still tend to make the choice load on autopilot. I don't think that this is ever going to go away. So perhaps the fear of investors moving more and more towards passive investment strategies is a bit overrated. I think that the majority will just do the default choice still, and then perhaps the stock can continue to outperform with greater and greater fees as assets under management increase over time. However, my final judgment on this stock is that me personally, I won't invest in it because I think there are other opportunities out there with greater risk to reward in terms of getting above market returns. But as always, I hope that investors who do decide, they make a ton of money, whatever investments they decide to go in, investing is, to increase your wealth. I always root for us retail investors. That's been it for this video. Let me know in the comments below if you think I'm wrong or right on this, if there's any stock you want me to take a look at, and perhaps also you can check out the Discord and see if you want to join the community over there. In that case, you're very welcome. Hope you enjoyed the video. Take care now. Bye bye.